Mr. Jared Dillian joins us from the Daily Dirt Nap, the author. Jared, you've seen a lot of Wall Street product in your day. Give me a quick thought on structured notes and what you heard there.
Oh man, I mean, I worked on a derivatives desk at Lehman, but I was like the dumb Delta One guy. I wasn't involved in structured notes at all. Like the rocket scientists that did that stuff sat behind me. I got scabs on my knuckles. I never did this structured notes.
I love that. I haven't heard that phrase. All right, well then perfect for this block. Let's switch it up. Let's talk about simple binary things for tomorrow. Inflation, hot or not. And as we talk, I'm going to go through some of the bets on Kalshi, which on the macro side, it looks like right now they're basically saying that it's unlikely to be above 2.9% for August. But that's for CPI. We got PCE tomorrow. Take me through your thought process.
Yeah, I mean, thinking back to the PPI print we got a couple of weeks ago, which was outrageously hot, um, in which people kind of discounted at the time. I think the risk is to the upside for tomorrow. 2.9 is not really a scary number, but 3% is. 3% could really shake things up going into Labor Day. You could get a significant sell off in stocks, bonds, precious metals. You could get a big rally in the dollar. Things look, this has been a super quiet week. I'm getting a ton of out of office replies on my newsletter. Everybody is gone.
That's what I was saying. I'm getting
Um,
picks from beaches, rivers,
yeah.
mountains.
So there is the potential for an exciting day tomorrow. Not saying that that's definitely going to happen, but given where PPI came in, I think there's that possibility.
To that point, does kind of echo what we were talking about with Brent at the top of the show, which is the market priced for fairly low volatility outcomes. The market too making highs. I just feel like there's no lack of spending power. So, why should inflation drift too low?
Yeah, I mean, I saw what you were talking about at the top of the show. It's, it's tough to be short. I mean, there is, gosh, like 5 to 8 billion worth of new money coming into the markets every day. Um, I saw the charts of the 6505 strike price on that condor and how it's acting like a magnet and how we're going up there. Like this is a tough trading environment, and I tend to lean a little bit bearish at the moment,
Okay.
but it's kind of hard to argue with the facts.
Do you see the potential for sticky inflation to become upsetting for those who think the Fed's going to go on a cutting spree? Take me through the connections into the dovish Powell narrative, the way you see it right now.
Yeah, I mean, I think we're going to be cutting unless we get just an outrageously hot inflation number. I think 2.9, even 3, is not going to stop the rate cuts. Right now we're pricing in a little bit less than an 80% chance of a rate cut in September. I think if we got a hot inflation number now, that would probably go down to about 60%. But just in terms of the internal dynamics at the Fed, the two dissents with the governors last month, there's institutional momentum to ease monetary policy, even with unemployment rate at 4.2%, even with stocks at all-time highs. I think we're going to get a handful of rate cuts this year.
I'm looking, if we come back in here to Kalshi, what's interesting is there's always this kind of spread between betting markets and, say, CME futures. To your point, CME futures are at like 80 plus percent, whereas Kalshi says cuts at 76. Obviously, you've got a much more liquid market from the futures, but anything to be said about that spread? Do you think that there's maybe a little bit of, I don't know, is there an ARB in 10 percentage points of what's going to happen in September?
Uh, I don't know that there's an ARB. I mean, I think you're looking at two different constituencies there. I mean, if you're looking at Fed funds and SOFR versus Kalshi, Kalshi is definitely, more retail. It's more punters. Uh, it would make sense to me that they're a little bit more skeptical of a rate cut. I suppose if you wanted to buy Kalshi and sell Fed funds, you could do that. I think it'd probably be more trouble than it's worth.
Right. Well, it's interesting too because the point of the punters is I would kind of think that they would be more jacked up about the cuts, but it's only at 76 here, actually down a point today. But what's interesting too is kind of thinking about afterwards is do we do one and then done, see how things go? The other thing too is do you think that markets making all-time highs, you know, does that relieve any of the pressure from Powell?
Well, I think the clues for that are in Powell's Jackson Hole speech, and I read the speech, and it was a very nuanced speech. It wasn't an unequivocally dovish speech. A lot of people said that the market overreacted to that speech. I think the reaction was actually appropriate. It was the first time that he actually really opened the door to rate cuts at all. So I think the reaction in stocks and the dollar and everything, I think that was actually appropriate. When we talked last week, when the Kalshi numbers were trading at 81 cents, you said they were selling dollars for 81
Right.
cents.
Yeah.
And I still think that's kind of the case.
Yeah. Jared, great to catch up. Appreciate your take. Nice macro for us.
Thank you.
Inflation tomorrow. Thank you, sir. Jared Dillian, author of the Daily Dirt Nap.